Have you ever noticed that during inflation, when groceries get more expensive, rent goes up, and families start cutting back, some businesses somehow end up making even more money? At first, that doesn't seem to make sense. If everyone has less purchasing power, shouldn't every company struggle? But that's not what history shows. Every period of high inflation creates winners and losers. While millions of Americans feel like they're running faster just to stay in the same place, certain businesses quietly watch their profits grow. The surprising part? Many of these businesses don't sell luxury products. Some provide things people use every single day. Others make money from financial systems that most people never even think about. And by the end of this video, you'll see inflation in a completely different way. Not just as rising prices, but as a force that shifts money from one part of the economy to another. Welcome to Money Explained Differently, where we uncover the hidden side of money and explain the financial stories most people never see. Imagine an ordinary American family. A few years ago, they bought a home with a fixed mortgage. They drive the same SUV to work, shop at the same grocery store every week, and enjoy the occasional dinner out. Then inflation arrives. Milk costs more. Insurance costs more. Utility bills climb. Even replacing a broken washing machine suddenly feels expensive. The family starts asking a question millions of Americans ask during inflation. Where is all this extra money going? It's easy to assume companies simply become greedy overnight. But reality is much more complicated. Inflation changes customer behavior. It changes supply chains. It changes borrowing costs. It changes competition. And most importantly, it changes which business models become incredibly powerful. Let's look at 15 businesses that often become more profitable during inflation and why. The first one surprises many people. Grocery stores. People can delay buying a new television. They can postpone a vacation. But they can't stop eating. That gives supermarkets something economists call steady demand. Even when prices rise, customers keep coming. Many grocery chains don't earn huge profits on each item. Instead, they rely on selling enormous volumes. During inflation, higher prices can increase total revenue, even if profit margins stay relatively small. Some stores also introduce more private label products, which often generate better margins than national brands. But this is where most people get surprised. Not every grocery chain wins equally. Stores known for lower prices often attract customers trading down from premium supermarkets. Inflation doesn't just raise prices, it changes where people shop. Next comes one of the oldest inflation winners. Energy companies. Whether it's gasoline, natural gas, or electricity, energy sits at the center of almost every product Americans buy. Factories need it. Trucking companies need it. Airlines need it. Homes need it. When energy prices rise, producers can experience periods of significantly higher revenue, especially if their production costs don't increase as quickly. Of course, energy markets are unpredictable. Oil prices can fall just as quickly as they rise. That's why energy businesses can experience enormous swings. Still, during inflation driven partly by higher commodity prices, many energy companies benefit. However, there's another side to this story. Higher fuel costs also increase expenses for thousands of other businesses. For them, inflation becomes a challenge instead of an opportunity. The third business is surprisingly simple. Repair companies. Think about what happens when replacing a car becomes expensive. People keep their old one longer. Instead of buying a new refrigerator, they repair the old one. Instead of replacing the roof, they patch it. Inflation often encourages people to extend the life of what they already own. Auto repair shops. Appliance technicians. HVAC service companies. Plumbers. Electricians. Many experience stronger demand because fixing something suddenly feels cheaper than replacing it. The biggest cost isn't always the repair bill. It's the price of buying something brand new. Next are discount retailers. Inflation changes shopping psychology. A family that once filled their cart at premium stores might start comparing prices much more carefully. Dollar stores, warehouse clubs, off-price retailers. These businesses often attract new customers simply because households become more budget conscious. Even families with comfortable incomes begin searching for better value. Interestingly, inflation doesn't always reduce spending. Sometimes it simply redirects where people spend. Now let's talk about one industry many people blame during inflation. Banks. This one requires a little balance. Banks make money in many different ways. One important source is the difference between what they earn on loans and what they pay on deposits. When interest rates rise to fight inflation, banks may earn more from certain loans. Credit cards, business lending, adjustable rate loans, new mortgages. But the story isn't always positive. Higher rates can also reduce borrowing. Loan defaults may increase if households struggle with rising costs. So inflation doesn't automatically guarantee bigger bank profits. It depends on lending quality, competition, and the broader economy. That's why some banks thrive while others struggle during the same period. What do you think? If inflation stayed high for several more years, which type of business do you think would benefit the most? Share your opinion in the comments. Now let's move to a business almost everyone interacts with. Credit card companies. When prices rise, people often spend more dollars even if they're buying the same amount of goods. Some households also rely more heavily on credit to manage rising living costs. That can increase transaction volume. Interest income may also rise if balances remain unpaid. But this is where people often misunderstand the business. Higher balances don't automatically mean higher profits forever. If consumers become overwhelmed by debt, defaults increase. Credit losses can erase much of the additional income. Successful credit card companies constantly balance growth with risk. Next comes insurance. Insurance companies regularly adjust premiums over time. As homes become more expensive to rebuild and cars become more expensive to repair, insurance coverage usually becomes more costly as well. Companies that price risk effectively may collect larger premiums while continuing to spread risk across millions of customers. However, inflation also raises claim costs. A vehicle accident that once cost $4,000 to repair may now cost much more because labor and parts have become more expensive. The companies that manage these rising costs efficiently often perform best. Another quiet winner is commercial real estate with long-term tenants and periodic rent adjustments. Imagine owning a shopping center where leases allow rent increases over time. As prices throughout the economy rise, rental income may gradually increase as well. Meanwhile, the property's replacement cost may also climb. Of course, higher interest rates can reduce property values, especially if financing becomes expensive. Again, inflation creates both opportunities and challenges. The outcome depends on debt levels, lease structures, and local demand. The next business may be hiding in plain sight. Waste management. No matter what the economy does, trash still needs to be collected. Businesses still require dumpsters. Cities still need sanitation services. Households still produce waste. Many waste management companies operate with long-term contracts and limited competition in certain regions. That combination can create pricing power over time. It's not the most glamorous business, but it can be remarkably resilient. Now consider companies that produce basic household products. Soap, toothpaste, laundry detergent, paper towels. These aren't optional purchases. Consumers may switch brands. They may buy larger value packs. But they rarely stop buying entirely. Large consumer goods companies with trusted brands sometimes pass a portion of rising costs to customers without losing significant sales. Brand loyalty becomes extremely valuable during inflation. Here's another business many people overlook. Payroll and accounting software. As wages rise, businesses hire accountants, payroll specialists, and software providers to manage increasingly complex financial records. Inflation creates more pricing updates, more payroll adjustments, more tax planning, more financial reporting. The software itself may cost only a tiny fraction of a company's operating budget, making customers less likely to cancel. Now let's talk about commodity producers. Mining companies, agricultural businesses, metal producers. When commodity prices increase faster than production costs, profits can expand significantly. Copper, gold, wheat, corn. The exact winner depends on which commodities drive inflation. But the real problem is something nobody talks about. Commodity prices can reverse quickly. These industries often experience enormous cycles. Today's record profits can become tomorrow's losses. Timing matters. Storage businesses are another interesting example. Think about self-storage facilities. Moving becomes expensive. Buying larger homes becomes difficult. People delay major life changes. As a result, many households keep extra belongings in storage units longer than planned. Storage businesses also benefit from relatively predictable operating costs once facilities are built. That combination can support profitability under the right conditions. Next are logistics companies that successfully pass higher transportation costs to customers. Not every trucking company benefits. Fuel, labor, and maintenance become more expensive. But businesses with strong contracts, efficient operations, or specialized services may increase prices while maintaining demand. The companies with the strongest pricing power usually perform best. One of the biggest winners during certain inflationary periods is the healthcare industry. People don't schedule a broken arm for next year. Prescription medications, medical equipment, hospital services, primary care. Demand often remains relatively stable regardless of economic conditions. Healthcare providers still face higher labor costs and supply expenses. But essential demand makes the industry more resilient than many others. Now we reach a business model that quietly becomes stronger as inflation continues. Home improvement retailers. When mortgage rates rise, homeowners become less eager to move. Instead of buying another house, many renovate the one they already own. They paint the kitchen, replace flooring, upgrade landscaping, finish the basement. Improvement projects can feel more practical than entering an expensive housing market. Finally, the 15th business. Companies that own valuable intellectual property. Software platforms. Business subscriptions. Digital services. Licensing businesses. Unlike manufacturers, these companies often don't need large amounts of raw materials for every additional customer. If their operating costs rise more slowly than their prices, profitability can improve. Some software companies adjust subscription prices annually. Customers continue paying because switching systems would cost even more. This pricing power becomes incredibly valuable during inflation. But here's the biggest lesson from everything we've discussed. Inflation doesn't magically create wealth. It redistributes it. Businesses with strong pricing power, essential products, loyal customers, efficient operations, or limited competition often adapt better. Businesses with weak margins, heavy debt, or customers who can easily stop buying may struggle. For investors, this explains why some stocks perform better than others during inflation. For workers, it explains why certain industries continue hiring while others slow down. For consumers, it explains why prices seem to rise faster in some places than others. The hidden story isn't simply that everything gets more expensive. It's that inflation reveals which business models were truly strong all along. Companies that can protect their profits without losing customers often emerge even stronger after inflation settles down. Meanwhile, businesses without that flexibility discover just how fragile their model really was. And that's a lesson that goes far beyond inflation. Whether you're choosing investments, building a business, or simply trying to understand why the economy feels different from one year to the next, the most important question isn't who is charging more. It's who has the ability to keep customers even after prices rise. Because in business, pricing power is often one of the clearest signs of lasting strength. If you want to discover more hidden truths about money, subscribe to Money Explained Differently. We explore the financial stories behind the decisions that shape everyday life.